सर आ जाओ मैडम, गौरव जी आगे।
Just give me a minute, sir. I'm putting it live on.
Take your time. Take your time.
I think we are good to go. So very good afternoon to all of you, to all my participants on the Zoom, and also the participants watching this live on a YouTube. A very warm welcome to my friend and speaker for the day, Tejveer Singh Ji from Mumbai. So let me start by introducing Tejveer. So Tejveer is a partner of DMD Advocates Mumbai. He is a qualified chartered accountant and a practicing lawyer with almost 18 years of experience. He looks young, but believe me, he has got a lot of exposure and rich experience as far as tax and other areas of litigations are concerned. He is regular in providing support, consultancy support to its client, and also assisting clients when it comes to investigation by various authorities like CBI, DRI, ED, SFIO, etc. So he's quite regular in appearing before the tribunals and the High Court. And for those who do not know, DMD Advocates is that firm which actually handled one of the biggest case under the Black Money Act of Yash Birla. And I think the edition was somewhere around 8,500 crores. So I'm sure Tejveer, you will going to share that the experience of that case and other cases which your firm is handling. Not particularly, I don't want to name them, but yes, the experience, the practical experience which you guys are having. As far as Black Money Act is concerned, we all know it's a very important topic. Specifically, it is applicable on resident taxpayers. Resident, we see it from the income tax perspective. So if you are becoming a resident under the Income Tax Act, then the Black Money Act would be applicable on you. And when we talk about the resident, it does not include resident, but not ordinarily resident. So we have seen, in a recent past, in the COVID times, many of our friends who were putting up outside India, they actually came to India, and they were doing the work, they were handling their offices or their work from India. Some were employed, they were employed outside India. But yes, because of the COVID, they came to India, they were working from home and they were exercising their employment in India. So practically, I've seen, a few of them have actually reflected their the global income, and many of them, they have not reflected their global income. So probably this Black Money Act is very important for them. And also, sometime we, while we are working outside, we open a bank account, and we start earning some interest, or we make investment in which we get dividend or interest, in the account outside India, but we do not disclose them. So basically, Black Money Act captures those transactions wherein the income should have been reported in India. Certainly, when I'm saying it is applicable on resident. So we all know that the global income of resident is taxable in India. So even if the resident is having a foreign sourced income, it must disclose that income in India. So it is applicable on the foreign sourced income, which is not disclosed in India, and also the assets, which are assets which you own outside India, or the financial interest which is outside India and which is not disclosed in India. So the ambit of the Black Money Act will probably going to grow over the period of time, because many Indians have started traveling for doing businesses, which is which means their financial interest outside India, is growing, and which needs to be reported properly in the Indian income tax return. So we thought, yes, this is a good time to have the discussion on the Black Money Act. So thanks to Tejveer for joining me in this discussion. Whether he would be leading the discussion, I would only be asking queries which are coming from our audience. So over to you, Tejveer. Thank you for joining once again.
So thanks a lot, Gaurav, and thanks for a great introduction. Also, I think in just few minutes you have very beautifully encapsulated as to legal side of it and the practical side of it and the issues which seems prima facie are the issues in respect of Black Money Act. So before we dive deep into the act, let's just have a look at broadly as to what are the factors which led to introduction of Black Money Act. So first is okay. So what were the factors which led to introduction of the Black Money Act? So if Gaurav, we have done our chartered accountancy together, or in fact, Rajiv sir has done before us. It seems so, unless I'm wrong on that account. But the younger kids today might not know that in 2007, there is a very popular case of Hassan Ali where the addition was made of like 1 lakh crores and the taxable income of around 35,000 crores was determined. It created furore in the whole country. It was full with the papers, and this Mr. Hassan Ali was having a lot of money in the Swiss accounts, and so that's when actually the issue kind of this case kind of warmed up to us to that there's too much black money in the country. After that, there was a case law of Ram Jethmalani. A petition was filed in the Supreme Court, and which basically highlighted to the Supreme Court that there are many publications and individual reports which state that a lot of individuals, companies has got black money stashed abroad. Resultantly, Supreme Court asked the government to provide the information and also to create a special investigation team to see as to what to do. Now, after that, in 2014, when the regime changed, one of the main plank was that there's too much corruption in the country. And so when the new government came into the power, they, then immediately, the black money was intended to be brought into act. And I think that in 2016, it was introduced. And there were other factors also, like, we received a lot of information from the governments, and government had signed various treaties like automatic exchange of information, AED. So many factors led to creation of this Black Money Act. So the only thing is, that the idea of introduction of the Black Money Act was the repatriation of the fund that was stashed abroad. But unfortunately, the government today, the authorities today are focusing in punishing and prosecuting the taxpayers. So that was actually not the idea. The main idea was so that the money which is there needs to be brought back. That is the reason the time limits were not defined, because the government was thinking that the money has been lying there for years. If you put some kind of a time cap, that money we might not be able to bring in. So though black money is a physical statute, but it's a act where if tax evasion is criminalized. So that way it becomes a little draconian. So now another question comes is that considering that the problem of black money is so prevalent all across the world, is bringing such an act is the only way to deal with it? Now, actually, Gaurav, if you look at it, that if we see the total amount of offshore money, and we see in terms of how much is the undisclosed income and the assets, the proportion doesn't seem to be, weighing very heavily in towards black money. In fact, many countries, how they dealt with it is they solve the similar problem by adopting alternate strategies. Like, they brought their tax rates pretty low. And recently an OECD has also conducted a survey which stated that in case you want to bring down the black money, then the right way to do is not to make your laws more stringent, but the more effective way to deal with it is so that the voluntary disclosure schemes which are brought in has to be brought in the time and again on a regular basis, and in such a way the people who comply with the voluntary disclosure schemes are better off than the people who don't comply. So that seems to be, point I'm trying to make is that the government can make a program where they can, rightfully, people who want to rightfully pay their taxes on the income and assets located abroad, then I think it seems will be a quite good move. And during the initial year when 2016 an act was introduced, for a 3 months window was actually provided where a tax rate of 30%, penalty of 30%, and actually you can just declare. So it was built in, but after that it has not come in. So it's
Tejveer, before we move forward, can you also throw some light? It always becomes sometimes confusing that what is the difference
I'm
between
not able to
PMLA?
move
What is the difference between the PMLA and the black money? Tejveer, are you there?
Yeah, I'm sorry, but there's a problem in the, sorry, what is the difference between?
Just a small input on what is the difference between PMLA and the black money law.
Okay, so Prevention of Money Laundering Act is a lot more stringent than that. So prevention of money laundering. Okay, so for the purpose of Prevention of Money Laundering Act, 3 conditions needs to be fulfilled. Prevention of Money Laundering Act does not provide for an offense. Offense has to be committed under some other act. Certain conditions needs to be fulfilled, and then PMLA comes into play. So 3 conditions are: 1, there has to be a scheduled offense. So in PMLA Act, there is a schedule which is provided that as to which are the offenses which are covered under PMLA. Second is there has to be proceeds from that offense. And third is that there should be cleaning up or laundering of the money, which means your black money has been converted into white money. Then your offense under PMLA is complete. Take a simple example. Someone robs a bank and kills the security guard on the way. And of course, looting itself, all those robbery, those provisions come into play. And this money is converted into white money. So then the PMLA comes into play. Now, the PMLA Act, a schedule is provided as to which are the offense under which are completed, then PMLA will be active. Proceeds has to be generated, and of course there has to be laundering of the money. So that is what the PMLA is. However, Black Money Act, of course, there are 2 conditions needs to be fulfilled. One condition, only condition actually needs to be fulfilled, is income from a source outside India or asset undisclosed asset outside India. So if these 2 conditions are fulfilled on a resident, then Black Money Act comes into play. So that's the difference between PMLA and black money.
I'm not sure whether we would be covering it later, but the question is coming to my mind. Let's say I'm a resident in the current year. But the income which I have not disclosed or the asset which I have not disclosed pertains to a period when I was non-resident. So does the law still applicable on that income or the asset which I bought it or which I invested in when I was non-resident?
No, Gaurav, no. See, because if you will be non-resident at the time when you acquired any undisclosed income. So first of all, your income would not be chargeable to tax in India. So there will not be question of this thing. Assuming, even if it is, let's assume that you fall within the ambit of Income Tax Act, the act is pretty clear that it is chargeable to tax on resident. Not take another, if let's take a reverse example. If reverse was true, then you would fall under MBA, Black Money Act. Reverse example, you gave an example where today you are resident, 10 years before you were non-resident. Take a reverse example. Today you are non-resident, but at the time you acquired the asset, at that time you were resident. Then you can fall under Black Money Act. But today, if you're non-resident, today you are resident, 10 years back when you're non-resident, when you acquired the assets, then you will not. Having said that, but our tax authorities are pretty zealous, so it is very much likely that you may receive a notice. So under two sections notices are issued. One is section 8 or one is section 10. Section 8 is like more like section 131 of the Income Tax Act, where this production of evidence or inspection, basically powers are given to income tax authorities similar to that of civil court to collect information. That where they call you, basically practically what happens, they call you to the office and collect all the information. So under this, it's section 10 is little more stringent, where actually the assessment proceedings start against you. So that happens only. So section 10 can be initiated only by joint commissioner or an additional commissioner after seeking approval from the commissioner. So yeah, so I think that answers your question.
Okay, let's do one thing. Let's go, let's follow the presentation that you have.
Okay.
And we'll pick up the questions after 10 or 15 minutes of the presentation.
Okay. So,
and to my audience, if you have any question for Tejveer or me, feel free to put the same in a Q&A or a chat box. If you're watching it live on a YouTube, please put your question in a comment section, and I would ensure that Tejveer answers your question. Okay. Over to you, Tejveer.
Okay, thank you. Thanks a lot, Gaurav. So I'm not able to move my. Okay, just come to section 3 slide. Okay, preamble is fine. Okay, fine. Let's go to, okay. So that's now the preamble. If we see the preamble says the purpose of Black Money Act is to identify undisclosed income and sources from which income is earned and undisclosed assets located outside India by residents. That's the purpose of that's what the purpose which is given in the preamble. And from this year, I think the requirement was from assessment year 11-12 only, but after that the form was amended. And today also there is a form FA which is prescribed, in which information needs to be filled of your assets outside India. So I think it is very wise thing to do, because there's a lot of criminal and very stringent penalties which are provided in the act, that in case you have any assets or income abroad, that you must disclose it in the form FA. Now, interesting thing, that one thing that comes to my mind is that this provision was applicable from 1st of April 2016. However, an executive order was issued as per which the provision was made applicable from 1st of July 2015. Or like, so basically act was given a retrospective amendment by way of an executive order. Now, making an act is a power of parliament. I mean, if by administrative order it's made retrospective, it's kind of impinging upon its space. So so that's why this executive order was challenged in the Delhi High Court in the case of Gautam Khaitan. The validity of this executive order is still pending, but the Honorable Delhi High Court stayed this executive order. Now the department went in the Supreme Court, and Supreme Court vacated the stay on this executive order on the ground that that when the act was introduced, along with that there was compliance window was of 3 months was also given. They said that it will have an effect on the compliance window. Resultantly, the Supreme Court considered that and vacated the stay which was granted, and that's the issue. Is just come to section 3. Yeah. Okay, section 3. Section 3 basically is a charging section. And whatever important definitions that flow from section 3, we'll look at it. But section 3 is the main section, like all the other acts. So charging section says it's very simple. The great thing about this Black Money Act is they have made it 3, 4, 5, which is where the interplay of chargeability is there. Very simple. So first, charging section says for every assessee, for every assessment year, his total undisclosed foreign income or assets shall be chargeable to tax at the rate of 30%. Pretty simple, nothing complicated. And so unlike Income Tax Act, where there's so many issues in respect of everything, whether it's chargeability or computation. So, and okay, there's a provision also which is added, which states that undisclosed income outside India shall be charged to tax on its value in the year in which it comes to the notice of the assessing officer. So to take a simple example, I think we suppose a property was bought in 1980 for say 50,000 rupees. It comes to the notice of the assessing officer in 2020 when the value is like say 10 crore rupees. So you'll be required to pay a tax on this 10 crore rupees. And so it's not only 30% of the tax, but there's a 90% of penalty also, which is leviable under section 41. So it's actually 120% that the assessee ends up paying. So that way is so that covers up our charging section. Now, if you see, the first requirement of the charging section is assessee. Now, what is the meaning of the assessee? Assessee, till 2019, the definition of the assessee included person who is resident in India. But Gaurav, the question that you asked, I think the parliament probably perceived that this issue may arise. So then they extended the definition of assessee, and they stated that if a person was resident today, if a person is non-resident but a resident few years back, and he has some undisclosed income or an asset, then such person shall also be considered as resident for the period when he was when he acquired. So and there is no time limit provided in the act. So the year of actually residency in that sense does not affect the person. There is one clause actually which provides that previous year for undisclosed income outside shall be determined without giving effect to the section 72C. So this actually will just come when we'll discuss 72C. Now, residency is actually a very important point. Residency, of course, as we know that in the case of individual, there are two basic conditions and two additional conditions. And in respect of firm, association of person and body of individuals, if it's depends upon whether control and management it's wholly or partly in India. In case of a company incorporated in India, of course, then that is considered as resident in India. In case of a foreign company, the residency, of course, is determined in the under case of DTAA on the basis of a permanent establishment, and in the case of foreign company having a place of effective management. Now, place of effective management has defined as where key management and commercial decision in substance are taken. Now, in respect to foreign companies, there can actually be a serious issue due to introduction of the Black Money Act. Take a simple example. It's a very common phenomena that when a foreign company comes into India during their assessment, an issue arises whether do they have a permanent establishment in India or not. Now, assuming the assessing officer says that there's a permanent establishment in India. Now, black money proceedings are initiated on that basis that you have some undisclosed asset or undisclosed income outside India. And the matter travels to tribunal, and tribunal says that there's no permanent establishment in India. By the meantime, this order comes in, the company might be put through penal clauses, and the prosecution might be started. We do not know. So how it will play out for foreign companies, it can actually be quite stringent. So, you being a transfer pricing expert, I'm sure you will have views on this.
I have one basic question. When we said the law is applicable on the resident assessee, why, why the assessing officer will going to put, BMA on the foreign company who has got permanent establishment in India? Because still the company would qualify to be the non-resident under the Income Tax Act. So if companies are non-resident under the Income Tax Act, I understand BMA should not be applicable. So
actually, the only thing is that, because this concept of POEM has actually not been put in practice right now, it's a permanent establishment through which we are charging. But I think in the times to come, the concept of POEM will start coming into play. So I think eventually what's going to happen now in the assessments, now they will start taking it from the point of POEM. So then, of course, the issue will arise.
Correct. So basically, to conclude, if let's say the officer concludes that the foreign company has got POEM in India, which we generally call POEM, place of effective management, then the company would qualify to be the resident of India as from the tax perspective. Now, being the company is a resident of India from the tax perspective, the BMA for that period may be applicable. Now, a few basic questions before we proceed from here. Because the law is applicable from 1st April 2016 basis of charge. So let's say I am resident on in the current financial year, let's say 21, 22, 23. But I have got some income, which I was resident earlier also. Before 1st April 2016, I was resident. And I was having some foreign income, which I have not disclosed. Let's say I earned some foreign income way back in 2009-10. So my first question is whether, and I have not purchased any asset from that, there is a foreign income in 9-10. Now, whether this law is applicable on the income earned by a resident, foreign income earned by a resident, not disclosed in the return, belongs to year prior to 1st April 2016.
Yes. So, okay. So I'm glad you brought this up. So that this seems, this is a slightly a
1 minute, Gaurav.
issue. Now, I'll just
Take it one, Gaurav. You have to differentiate between the receipts and the income. That you have to clarify. If a person is having a property overseas and he has borrowed money and the income is far less than the interest paid, will it still be considered if he declares the property but does not declare the income?
So you are making our question more complicated, sir. So
I've got your point, sir. So like, can I just answer Gaurav's first, then we can just take your question. So Gaurav, as I think so if you see the section 3, okay, I'll make it first. I'll give you the answer first, then we'll go on to explanation. Before 2016, if there is an income will be chargeable to tax under Income Tax Act. And if there is an undisclosed asset, that will be chargeable under the Black Money Act. So if there is an income which you have earned before the 1st of April 2016, that will be chargeable under the Income Tax Act. Because if you see the section definition of the section 3, it talks about charging in respect of assessment year, in respect of income after the assessment year. And this view has been validated by the Gujarat High Court also. So, but in respect of asset, of course, as it is provided in section 3 only, that on the value in the year in each year in which it comes to the notice of assessing officer, because of which the assessment year becomes when it is in the notice of the assessing officer. So to answer that your question, before 2016, if it is an income, it will be chargeable to tax under the Income Tax Act. Now, sir, I mean, to answer your question, if I may say, sir, right, as you rightly pointed out, sir, that gross receipts will not be chargeable to tax. Tax has to be in income. But if you read section 5, which talks about the computation, they say that no deduction shall be allowed in respect of expenditure or losses. Now I understand the idea cannot be that they'll charge, if I'm running a business and I have undisclosed income out of that cannot be that they're going to charge my gross receipts of that, definitely. But they have put it just out of abundant caution, so that the because a lot of claims arise due to our so we have such creative community, such intelligent people. Like the simple example is, this year amendment is made in the Income Tax Act under section 79A. 79A says if there's a search or survey and any undisclosed income is found, then your losses could not be set off against that. Now earlier what used to happen was, suppose there's a search conducted, and during the course of the search, the first and some unstopped hello. Yeah.
My mistake, continue.
Okay. So now if the assessee is if the assessee, so during the course of search, if stock is found, the assessee would first argument will be that there's a loss which is pending, and this loss I will set off. So counter that section 70A 9A is introduced. So I'm saying, just out of abundant caution, that provision is there where they say that deduction is to be allowed. Otherwise, like you rightly said, that tax under Black Money Act, they don't intend to charge it on the gross receipt basis.
Thank you.
You may proceed, Teju.
Okay. So now section, right. So So there's, okay, just one more thing actually, Gaurav. I think out of the offshoot of the first question that you asked, lot of non-residents have been issued notice under the Black Money Act because when they were resident, because lot of residents. See, residents are today in the Indian territory, so they are within the ambit of the jurisdiction of the assessing officer. What they're doing is they're issuing notices to you, even if your assets you purchased when you were a non-resident. So these kind of notices are coming. So in that a situation, the assessees can go out when I was a non-resident. So there is no question of being undisclosed or income or an asset. However, it is extremely important that you disclose it in your return of income, anything which is outside, just to cater to such situation. And also it's extremely important if you can, preserve the evidences that you have of all the assets you have been bought abroad, just in case in future any kind of such a notice comes in.
So basically, we can discuss one important definition under the Act, which is of undisclosed asset located outside India. And as per that definition, if one is able to explain the sources of the asset or source of the investment, then it will not qualify as an undisclosed. So even if, let's say, the notice is coming to your clients and with regard to the assets which they have bought it when they were non-resident, I think important is ask your clients to have document to prove the legitimate source of purchase of those assets or investment. And if the source, as we discussed, since we have already discussed this point, and if the source is not taxable in India, then in such case, the asset would not qualify to be undisclosed asset under the BMA, and it would not brought to charge under BMA. Am I correct, Teju?
Yes, correct, absolutely. And I'll just take this one step further, Gaurav. I think as you rightly pointed out, the issue, the only thing is, suppose it's a resident, he discloses his asset in return of income. That does not mean that his income has become from a disclosed source, or asset has become from a disclosed source. Proving the source of his income still remains an issue. Disclosure in your return of income today does not mean that the source has been proved. So assessing officer can still come after you and ask for the compliance in respect of showing the source. Okay, so next section is section 72C. 72C basically says that asset acquired in the year in which it comes to the notice of assets will be deemed to be considered to be acquired in which it comes to the notice of the assessing officer. That is what the issue is. So as we were discussing during the last query, this is basically to avoid the time jurisdiction. It should not be that 2 years or 4 years. Now anytime it comes to his notice, the jurisdiction starts. That's what the basically issue is. Now if you look at it, Gaurav, there seems to be some kind of a conflict between section 3 and section 72C. Section 3 says asset will be chargeable to tax on its value in the year when it comes to notice of the assessing officer. And this section says deemed to acquired, in which how can you charge it in the year in which not even acquired? Is it possible, right, that you're not acquired? Then how would you deal with it? So because I'm putting this across because this question came to me for a client some time back. So answer to that is section 72C is merely a deeming provision. It has a very limited play. It's not that it has it'll interplays with the whole of the act and will color section 3 in some way. No, that's not true. So section 3 stays independent and section 72 is very limited. And also there is an internal guideline of the department also which is issued, which says that it will be chargeable to tax when it comes to the notice of the assessing officer, but notice can be issued on a later date also. So that doesn't seem to be in conflict. But one issue that comes out of it is, which is important, is that previous year from the point of view of an income and from the point of view of an asset is determined on a separate parameters, as exactly the point that we were discussing, that before 2016 the income will be chargeable under the tax under Income Tax Act, and as unacquired asset will be chargeable under the tax under this act. So, previous year of income and asset could be determined on a separate basis. Okay, so just go to next slide. Go to next slide. Yeah. Next is undisclosed foreign income and asset. Now, again, this definition is also very simple. Undisclosed foreign income and asset. Okay, let it be now. Let's go this first. Okay, undisclosed asset located outside India. Now, undisclosed asset located outside India is again a very, very broad and a very simple definition. Assets include financial interest in an entity located outside India, held by the assessee in his own name and in respect to which he's a beneficial owner. Now, this definition of beneficial owner is extremely important.
You are on mute, Teju.
I'm sorry. Yeah. So, held by the assessee in his name or in respect of which he is a beneficial owner. So, beneficial owner means okay, we'll come to the beneficial owner separately. It's a very no explanation or explanation is not satisfactory. So if these conditions are fulfilled for the purpose of this. Now, so the thing is that some undisclosed asset held on date of commencement of the act is taxable under this act. That goes without dispute. Now, if any asset is acquired but is transferred before the commencement of the act, that will also be taxable under the act. So basically it means that when the non-existing asset which you do not own, that also can be taxed under this act. Come to next slide. Undisclosed foreign income and asset. Okay. Okay, now undisclosed foreign income and asset. Undisclosed foreign income and asset include basically means total of undisclosed foreign income from source outside India, value of undisclosed asset located outside India, referred to in section 4 and computed in a manner laid down in section 5. Such a simple definition. So it's very, very wide. Basically, they want to say any income or any undisclosed as income from a source which is not disclosed or any asset outside India, you're liable to pay tax on that. Now, of course, as you pointed out earlier, what was prior to 2016, what was happening was that such income was taxable under the section 68 to 69D. Now, of course, it has come under this provision. And at that time, government has also introduced a one-time voluntary declaration scheme where you can pay 30% tax and penalty, and you could get immunity from the 5 major acts. Now, important point actually what is here is, Gaurav, that the definition of the term income. Now, for this purpose, we'll have to depend upon Income Tax Act as to what the income is. So, and and in respect of asset, an very important point. Now, this was actually a question given in the CBDT circular. Even you have inherited assets, inherited undisclosed foreign assets are taxable. So it's not that if you have not purchased or bought does not mean that you're not out of ambit. If you have inherited, then also will be taxable. So one example which is given is a person acquires an asset, sells the asset, money is in the account, and he passes away, and the money is transferred to his son. Now it's a liability on his son to disclose this asset. Now, how penalties and prosecutions will work is a separate issue. And also, the issue that arises is that the section 40 penalty seems to be compulsory in nature. Now, in such a situation, whether a person should be liable to pay penalty, I mean, it seems a little unfair, because including the penalty amount, the amount becomes 120. So if this person has received from his father 100 rupees, 120 rupees he'll be liable to pay. And I'm not even talking of the interest, which is like there's a section 40 of 234 ABC interest. So I'm not even talking of that interest, including that. I think so somewhere there are certain clutches of this section which can make it very unfair for certain people.
Tejveer, one question. Sorry to disturb you again.
Yeah, please.
Just wondering.
No.
Yeah. Why can't we argue in this matter that the source of the asset is the legacy? Correct. I got.
Yeah.
So, and the undisclosed asset, the subsection 11 of section 2 clearly says when the no explanation about the source of investment has been made. So when I'm giving the source of this investment, and the word is investment. So investment to my mind, is an activity. It's talk about some action I have taken. So I've invested somewhere. So if I have not invested in anything, which I only inherited, and I'm able to explain this source, how, why I should get taxed in the PMA? Just a question.
No, so I didn't understand the reference of section 11 that you were giving, Gaurav. Did you say 11? Did I understood it right?
Section 2, subsection 11.
Oh, section 2. Okay. Section 2. Okay. Subsection 11 of. See, the idea is that, undisclosed asset he has become the owner of the asset now. The word uses the beneficial owner in respect of the asset. So whatever said and done, after he has inherited, he's become the beneficial owner. So he is liable to pay tax. So in case of Income Tax Act, what happens is there's a provision for taxability on your legal representatives or as to how it devolves. Now there are certain limitations that are there. Under Income Tax Act, suppose I inherit rupees 100 and there's a tax liability of say 200. Okay, so under Income Tax Act, suppose I inherited 100 rupees, but also there's a tax liability on that comes out 200 rupees. My liability is only 100, but that is not the case under the Black Money Act. But to answer your question that how hereditary can come under 211 is that he becomes a beneficial owner. When he becomes a beneficial owner, then he's liable to pay. And also it is CBDT has clarified that. But having said that, we do not know. Maybe some genuine argument, very ingenuine argument like you may able to develop and go to court and try to get relief in respect of that possible. So
basically,
if a court
like to argue, I'm not sure. I'm just understanding the law. That if let's say the inheritance is not taxable, because if it is not taxable under the act, it cannot be taxed under the BMA. This is my basic understanding. Because BMA apparently seems to be the extension of the Income Tax Act. So if inheritance is not taxable under the Income Tax Act, correct?
Yeah.
How the inheritance can be taxed under the BMA? This is still I'm not clear. Secondly, what I feel. Now let's say I've inherited some asset, which is the foreign asset. And now I'm earning rent from that foreign asset.
Yeah.
Probably the rent becomes taxable under the BMA.
Yeah.
But still, I think maybe. I think it can be argued.
So Gaurav, first is So Black Money Act, also undisclosed asset is also part of the your Black Money Act, but Income Tax Act only talks about in respect of income. So that is, I think that is, if you look at it, see, someone inherits some property from their parents. It is the nature of the asset, right? You'll call them an asset. So that way, if you see, it's an asset which has devolved. Secondly, in respect of Income Tax Act, also you see a person earns 100. Like take example of Mr. Rakesh Jhunjhunwala. He has passed away a few days back. I'm sure he must have earned say like 50 crore rupees in the year till this date. He's passed away. It doesn't mean that he is not be liable to pay tax on this. It'll be chargeable to tax in the hands of the legal heirs. So to answer, but Income Tax Act, the point is, suppose 50 crores suppose is the income of Mr. Rakesh Jhunjhunwala, and say liability comes out to like 15 crores or something, and Mr. Rakesh Jhunjhunwala's kids inherit say only 5 crore rupees from him, their liability to pay to income tax department will only be 5 crores, not 15 crores. But this benefit is not there under the Black Money Act.
So I got it. Let's not name anyone. Simply what I understand now is, I would be taxed if I'm not able to explain the source of the asset, which was inherited to me. So let's say the parents have invested in the asset, so that income may also be taxed in India. This is what you are saying, broadly.
I'm saying no. You might be able to explain the source, but you have to pay tax on it. If it is tax on paid on that income, there is no problem.
Absolutely, got it.
Okay, so so the next slide is, yeah. So section 4. So section 4 says that. So what does total undisclosed foreign income and asset include? It includes income from any source located outside India. Now, if you have filed your return of income and have not disclosed in your return, and if you have not filed your return, so both this will be added, and also the value of undisclosed asset located outside India. So that basically just 3 things will be added in within the scope of section 4. Now, section 3 of section 4 says some included in the undisclosed foreign income and asset will not be part of the total income under the Income Tax Act. Now, that makes it a little important, which means this act in a way prevails over Income Tax Act or give precedence to Income Tax Act. Now, it can actually have far-reaching consequences. In the times to come, we will see. Now there is subsection 2 of section 4, which basically says that in case there is a variation of addition in from income from business or other sources or transfer pricing under. So that's what the issue is. Now there's one very important issue that comes in is there's suppose if you say in A only 139, 1, 4 or 5
You are not audible, Tejveer. Tejveer, are you there?
Hello.
Yeah.
Gaurav, can you hear me?
Yeah, we can hear you. You are not visible. So basically, in the meantime, Tejveer sets a system. So what I understand, scope of.
Yeah. Can you hear me?
Yeah. Please continue. So basically, Tejveer we are not able to hear Tejveer. Let me try to explain this in brief. Broadly, there can be 3 situations which I understand. One is you are a resident, you have filed your return in India, but you have not disclosed your foreign source. So that is covered under section 4. Second, you have not filed ITR altogether in India, and you have a income from the foreign source. So this is the second category under which section 4 would be applicable. Third category is you have undisclosed assets located outside India for which you have not disclosed or for which you are not able to explain the source. I think broadly these 3 categories would come under section 4. Correct?
Absolutely.
So, over to you, Tejveer.
Absolutely. That's the basically issue. Now, one actually point that we need to consider, Gaurav, is that where section 139(4) and is mentioned, there the reference of 148 or 153A is not mentioned, which means if you file your return of income under 148 or 153A, then you have disclosed in your 148 or 153A. Now, in respect of that income, you will still be within the scope of section 4. Now, it sounds a little crude as to how all those issues will play out, which means you want to tax them under Black Money Act, and the proceedings also go under income tax. No, logically speaking, of course, will be taxed only under the Black Money Act, but still that is a harsh provision. We need to see how it plays out. Now, it's actually one very important, very interesting case happened in respect of this, of Muhammad Harris by Karnataka High Court. Now, in that case, what happened is some undisclosed asset was found. Now after that, the assessee filed a revised return under section 139(4) and declared his undisclosed asset. Now, the department invoked section 50. Section 50 is criminal complaint for non-disclosure in your return of income. The court said that he has disclosed it. Where is the question of not disclosing it within the time limit? And this section 50 penalty was deleted. So I'm saying that in that sense, the court has been quite lenient. And as we'll progress with the presentation, there have been many cases where court has actually taken assessee out of the clutches of this unfair application of the provisions of this. So yeah, okay. So just next slide. Right. So this also we have discussed. Following variation.
Can we take some question?
Please.
So Sharad Goyal, is our participant, is asking, what if undisclosed asset is disclosed in ITR filed under section 139(8)(a)?
139(a).
8A.
8A. Right. So in respect of 8A, so technically speaking, if you file under updated return, relief should be given to you. But till date, no amendment has been made in the act, and so right now you do not have it. But these are actually the tricky issues for which courts are there. If the matter eventually travels to court, it seems that whatever relief you're trying to seek, whether in respect of penalty or prosecution for non-disclosure, then I think you should be entitled to get relief in respect of. So to answer your question, if you declare in 139A, though it is not specifically provided in the act, but most likely you'll get relief from the court. If there's enough disclosure.
Okay. Yeah. So let me take another question from C. Atmaram Sariaji. If a non-resident relative residing in UK for more than 40 years, non-resident relative in UK residing for more than 40 years, made a will for his self-acquired properties and the proceeds of the same is transferred to Indian resident after his death, whether it will be taxable in the hands of Indian resident under any acts. Sariya ji, I think आपने question बहुत बड़ा कर दिया. So the property received from a relative and the relative is non-resident. So in general, Tejveer, when it can fall under the Black Money Act. Just in brief, if you can explain, without going into under the act, other acts. But in brief, if you want to know, let's say I am in receipt of a property from a relative who is a non-resident under the will.
Yes.
So under what conditions it can fall under BMA, Black Money Act? And given the fact that the relative was actually a non-resident for almost 40 years.
So
you are not audible, Teji.
okay, so if it was a non-resident, that income was disclosed, question of disclosing or non-disclosing.
You are again not audible. Okay. Sariya ji, in the meantime, Tej will join us back. My view.
So if it's 40 years, then.
Yes, continue.
So basically, if he's a non-resident, so then there is no question of disclosure in under the Black Money Act or under the idea. So there is you do not fall within the ambit of the Black Money Act. So it's like yeah.
Just one cautious, one needs to exercise. Until and unless it falls within the premises of gift and it becomes taxable under the Income Tax Act, I cannot foresee that it will get taxed under the BMA. Correct?
So if you are saying that gift, okay, if it becomes a gift and he wants to. So no, see, even if it becomes gift, so it really my hands will be chargeable. So see a foreign resident is an American US citizen. He's never visited India. 40 years later, he wants to give me a gift, right? So if that is the case, then I will be chargeable to tax and
Yeah. In the hands of the recipient, I'm talking. In the hands of the recipient, I'm talking about. Tejveer, I would suggest to switch off your video because I think there is some net issue at your end. Tejveer, you are not audible.
Okay, fine. Okay.
Atul ji,
गौरव जी से मेरा एक क्वेश्चन है छोटा सा. If I am permitted.
Yeah, sure.
A person was a non-resident, then he came to India and he became resident but not ordinarily resident. And in the third year he went away again and became a non-resident. Is he supposed to deflect this asset overseas because he became a resident but not ordinarily resident?
Sir, the law is not applicable. The BMA is not applicable on resident but not ordinary resident.
Okay, clear. Thank you.
Sariya ji, you want
Actually, it is applicable only on the residents.
On the pure residents.
Okay.
क्या पूछ रहे हैं सर?
सर आप कुछ कहना चाह रहे थे, मतलब क्वेरी आपकी थी तो मैंने कहा.
हाँ नहीं, मैं तो ये कह रहा था कि ये तो रूटीन में रिलेटिव्स है, तो रिलेटिव तो इंडिया में ट्रांसफर करते ही हैं. क्लोज रिलेटिव है तो इनकम टैक्स में तो टैक्सेबल अदरवाइज है ही नहीं वो.
तो सर टैक्स नहीं लगेगा. अगर देखो देयर आर टू हैंड्स बेसिकली. जो रिलेटिव है उसी का मान लें कि उसकी जो इनकम है वो अनडिस्क्लोज्ड है, उसने इनकम इंडिया में डिस्क्लोज करनी चाहिए थी, वो नहीं करी. बट आपके
नहीं, वो तो 40 ईयर से वही है, तो वो अपनी इनकम वही डिस्क्लोज करते हैं आयरलैंड में,
तो उन पे एप्लीकेबल नहीं हुआ ये. नाउ कमिंग टू the India portion में when I am receiving it from my relative, it is not taxable as a gift. So if the income is not taxable as if the receipt is not taxable as income under the Income Tax Act, then it would not become an undisclosed income. So if it is not an undisclosed income, it will not get taxed. बट जो मैं एसेट रिसीव कर रहा हूँ उनसे जो मेरी इनकम आ रही है मैं प्रॉपर्ली डिस्क्लोज कर रहा हूँ नहीं कर रहा, आई थिंक वो हमें प्रॉपर्ली देखना और समझना पड़ेगा. एसेट एज सच विल नॉट बिकम टैक्सेबल अपरेंटली. यस शरद, यू वांट टू से समथिंग?
Sorry, I don't know. I
have a question with respect.
Sorry, can you hear me?
Yeah, Tejveer, please welcome back. Sharad is asking some questions, so Sharad, please go ahead.
Thanks, Gaurav. Tejveer ji, I have a question with respect to the definition of undisclosed income and undisclosed asset. So there is a resident employee who received shares under the ESOP scheme of the parent company. The parent company is a foreign company. So for the last since 2013, he is every year receiving ESOP shares. So, and all those shares were sold in the year, say last year 2021, he sold all those ESOP shares and disclosed the capital gain income on that ESOP shares. And when every year since 2013 ESOP shares were received, it was disclosed as a perquisite in the Form 16. And it means there was a disclosure of the ESOP through the salary income. So does it amount to undisclosed income? Because we can say that the source of that ESOP shares is in India. It is not outside of India because he is receiving ESOP because he is an employee of an Indian company. Number one. Number two, does it amounts to undisclosed asset because he never disclosed those ESOP shares in his return of income in the FS schedule?
Okay, so just one query question. You're saying that he paid tax on the capital gain, right?
Yes, he paid capital gain
so
tax in the year 2021.
I think Sharad, you also said that he disclosed the ESOP under the ITR, under the Income Tax Act, correct?
Yes, as part of salary income, because the ESOP became perquisite and there was a TDS and it was disclosed in Form 16.
So basically his contract was with the Indian company and his location was India. He got ESOP, he disclosed them in the ITR. Later on, he sold and disclosed the capital gain, paid tax on the capital gain. So what is the question?
So actually he was holding the shares of a foreign company, say the American company, he got the shares. But those foreign shares were not disclosed in the FS, foreign asset schedule of the ITR form for all those years when he received all those shares. So some disclosure was going in the return through the salary, but the exact disclosure in the FS schedule was not going.
Okay, so the officer wants to take a stand that you have not disclosed in the ITR under FS schedule. So we should treat the same as the undisclosed assets located outside India. This is the question.
Yes.
Yes, Tejveer, over to you. Tejveer ji, are you there?
Gaurav, there will be one more question in this. Was the ESOP were enforceable, or they were only entitlements?
Tejveer, you are not audible. So before Tejveer joins, let me take a risk of answering this question. Basically on the Sharad, on your question, I'm not sure, sir. Sharad bhai, I feel going by the language of the provisions, technically it will not become, or it should not become undisclosed asset, because you are able to explain the source of the investment. So because you have already, see, first of all, the income which you are investing is a India sourced income. You are paying taxes on that, so there is no problem in the income. Now, as far as assets are concerned, my financial interest is concerned, there are two legs to it. One is I have not disclosed it. Second, I am not able to explain the source of such investment. And if both the conditions are getting fulfilled simultaneously, then only it will qualify, in my humble view, it will qualify as an undisclosed asset located outside India. But in your case, I think
I don't think it's a problem now. I think I've changed my internet site. Okay, to answer, so I'm sorry.
So I was completing Tejveer, what I'm saying now in this case, because you would be able to explain the source, and you have already said that you have paid taxes on such source. Probably, I think there is a good argument to say that it should not fall within the meaning of undisclosed asset located outside India. This was my take.
Absolutely. Exactly what the answer is. But I think one factor that Sharadji you need to take care of is that the penalty for
Tejveer, we are facing problem with your net. Sharad, you want to say something in the meantime? Tejveer joined.
No, Gaurav, thanks. I follow what you have said, that there are two legs. First is the disclosure, second is the source. So in this particular example, the source is very much explainable to the income tax authorities. And in fact, that source is my salary income, that was already disclosed to the income tax authorities. And in the form 12BA, there was a particular mention of ESOP. So we can say that the source is explainable, but let's hear from Tejveer ji what he has to add into this.
Okay, I think yes, Atul ji, you want to add something?
I was asking Sharad ji that because they generally are enforceable after 10 years, the ESOPs, was the employee, and did he exercise the option when he sold them, or he had the option to sell them anytime?
No, sir, ESOP becomes a perquisite only at the time when the employee exercises, means the shares are allotted to the employee. So in my example, every year some number of shares were getting allotted to the employee. He was getting the right in the shares.
No, but,
And he was,
but could he exercise the option of encashing them at that year?
yes,
He could.
yes, he
Then,
could.
then in my humble opinion, there is a violation because the department says that you got salary and out of that salary you bought shares overseas, which you did not disclose, unless the ESOP have been specifically mentioned of overseas company in the return itself.
I think some net issue is going on in the office. I have requested Tejvi to join through his mobile. Let's see. So we were discussing about the BMA. My basic understanding, very few very important principle under the BMA, which I feel which we must understand, that BMA is applicable only on resident. And the resident could be company, partnership firms, individual, HUF, anyone can be resident in India. But it is not applicable on individual and HUF if they are resident and not ordinarily resident. Now, the objective of BMA Black Money Act is, so before I move on to this second step, I think another important concept is the global income of resident is taxable, we all know. So whether it is sourced in India or sourced outside India, the global income is taxable. Whereas in case of non-resident, only income sourced from India is taxable. And in case of resident but not ordinary resident, only that income is taxable if it is sourced from India. Plus, if the resident but not ordinary resident is involved in the business or profession, if the control of such business or profession is from India. So that's why the act has got the limited applicability, because if we will apply BMA on non-resident, if we will apply BMA on the non-resident, then there is no point taxing the income of non-resident and from outside India. So the limited applicability of the BMA is that there is a resident and he has got some income outside India, which he has not offered for taxes in India. So we want to tax that. If we want to tax that, we can always tax that under the Income Tax Act, but we want to make it very serious affair that you must disclose this income under the Income Tax Act. So we brought in BMA, which is more stringent in comparison to the Income Tax Act. So now onwards, one must start taking, if you have foreign income, you must disclose that foreign income to the tax authorities. If you will not disclose it, we will going to tax it under a BMA, wherein the penalty is 90% and the tax rate is 30%, but virtually you would be paying 120% of what you have won. Secondly, as far as undisclosed assets are concerned, we will going to tax them if, let's say, you have bought those assets from income which you have not explained to us. So you must disclose what assets, what financial interest, what investments you have outside India, because again, they are foreign source. Now, because they are located outside India, and you must explain their source, how you have bought it. So if your source, if again, that source, if you are able to explain, that's okay. But if you are not able to explain, source you are able to explain and you have put it to tax as per the income tax provision. So for example, let's say I was non-resident at some period and I was earning income, I bought it asset. So now I'm able to explain the source, but I have not offered that income for taxes in India, but that's okay. That income is not taxable. It's okay, perfectly okay, no issues. But let's say if I'm a resident, I earned some income. From that income, I bought some asset. Now that asset becomes the undisclosed asset if I'm not able to explain the source. So this is what the brief understanding. Now Tejveer is with us. I hope his internet works well. So Tejveer, I think in your absence, I did my best to create some fundamental. So over to you now.
Oh, no. I couldn't have explained as well as you have explained, and your ability to do extempore is phenomenal. So and so is your knowledge and common sense. So, okay. So the only thing actually, we are still the same query if I understand. So the only thing is, Sharad, that there is another issue that needs to be considered is that there's a section which says that order need not be passed for the purpose of imposing any penalty. So point is that if there is no income against you, suppose there is no, you have disclosed your income under Income Tax Act, no tax liability can come under Black Money Act. But that does not mean you'll be free from liability for non-disclosure or prosecution from non-disclosure, because there is no liability. So that way, that can really hamper you. Eventually, courts may strike it down if you have a genuine case. It's a separate issue, but you may still have to go through it. So that way is, if you have not made disclosures, it's better to make disclosures in the, if you by any method, is definitely in the next year when it comes. So shall we come to the next point?
Yeah, please.
Yeah, okay. Next is section 5. So section 5 says, section 5 basically says that in computing total undisclosed income and asset, no expenditure, allowance, or set off of loss will be allowed. Assets obtained out of declared income under Black Money or Income Tax Act, you will get a deduction of. And for immovable property, if you have bought an immovable property and part of it is disclosed and part of it is undisclosed, then you only the undisclosed part will come within the ambit of section 5, not the whole of the income. So that's the thing. Yeah. So actually, if you have declared your income under Black Money or Income Tax Act, then of course there is no issue. Now, the one issue that arose is why this benefit is given only in respect of an immovable property, not in respect of the other assets. Now, I think the CBDT, in one of the questions that was raised in their circular, they have clarified it. This benefit is available in respect of other assets also. So basically, which means is that other than in respect of any asset, if part of the money, part of it is disclosed, then in respect of that disclosed income or asset, you will not be liable to be made tax under Black Money Act. So now there is actually, there's one point that arises. Of course, there's a kind of a contradiction here. On one side, they say no deduction shall be allowed. On the other side, they're saying they're using the word income. So I think that issue that we have already discussed, as was the issue raised by the Atul sir. Now, and of course, that also we have clarified that rather than immovable property, it applies all across to all the asset class. Now, one issue arises is that how the assets are to be valued. So actually, it is pretty simple that as to how the assets are to be valued. Its basic thumb rule is the day, what was the cost of acquisition versus the day on which you are acquiring. It was the value on that date, is the higher of that value will be taken. That is the rule. Only two exceptions of it that comes out is, one is in respect of bank account, that how would you value the money lying in the bank account. Actually, that is also quite simple. One is you take the amount in your bank account, you take all the sum which is deposited, then you deduct the deposit in respect of which you have declared or paid tax, and you also deduct the amount which was withdrawn from such account. Now, when I speak, it's very simple, but when it comes to calculating, it's a hell of a job. I know that. So in other words, in simple words, what the act is trying to tell you is that while calculating the money lying in your undisclosed foreign bank account, the disclosed one has to go, and secondly, you calculate the peak of the undisclosed amount. So what was the highest amount that comes to, that is the will be considered as the balance in the bank account. Now, the third that comes out is to be one illustration which is given. Suppose you buy an asset and you sell it before the coming of the act. That money lies in your bank account for a certain time, and then you buy another asset, and again the money is lying. How do you calculate that? Now there also they have given an illustration. I'll just explain it, but that is again a simple version of it. A lot of variations can come into it. Suppose you buy the property in 1997 for 20 lakhs, and then you sell it in 2001 for 25 lakhs. So for this property, 20 or 25 lakhs, whichever is higher, purchase rate or selling rate, whichever is higher, will be taken. So 25 lakhs will be taken. Now this 25 lakh rupees is deposited in your bank account. Okay. And maybe a little while later, you buy another house for say 30 lakhs. And today in your bank account, there is 70 lakh rupees. Now your bank account will be 70 lakhs minus 30 lakhs. 30 lakhs because you have bought a second house for 30 lakhs. And because for a second house, they will value later. So in the only in the sort of bank account, it will be 70 minus 30, hence 40 lakh rupees will be taxable. And your second house, which you bought for 30 lakhs, you bought it for 30 lakhs. Today, the value is 50 lakhs, higher of the two, 50 lakhs. So that will come out to be your value. So this is just one complicated example of this, but otherwise, basic thumb rule for sake of simplicity we should take is the date on which you acquired, cost on the date when you acquired versus the cost on which they are valuing, whichever is higher. So next is which are the tax authorities under the Black Money Act. Now section 6 provides that income tax authorities specified under section 116 shall be the tax authorities. The jurisdiction of the tax authority shall be same as provided in the Income Tax Act. Now, it also says, suppose the assessee does not have any assessable income under the Black Money Act, then the jurisdiction will be in the area where the assessee resides, or where he carries on his business, or where he has principal place of business. So either of the three will be the jurisdiction. Now the next, no, that was actually more on theoretical line. Now this section 8 is extremely important. Section 8 says powers of the tax authority. Now, how practically under Black Money Act the things work out is that so information comes to the income tax department from any of the sources. When it comes to the income tax department, the assessing officer issues you a notice under section. So under section 10, the assessment is carried on, but before that, they issue your notice under section 8. Many times they don't issue you also, because if the information is very strong, then they straight away proceed under section 10. But a lot of times they do issue you under section 8 notice, and they will ask you to provide the information. And if they're satisfied with the explanation which is given by you, then they drop the proceedings there only. Now under section 10, the power of tax authorities, they have the same power as are given to the civil court. That is discovery and inspection, enforcing attendance, compelling production of the books of accounts, and issuing commission. Now, first of all, for invoking section 8, it is not important that any proceeding is pending before the income tax authority. And secondly, the another point to be noted is that under the Black Money Act, there is no provision for search and survey. So, but however, if there is search or survey which is conducted under Income Tax Act, that information can be used. It's a separate issue. But they cannot conduct search and survey. Hence, this section 8 is the only section under which they can ask for information from the assessee. Now, section 9 says proceedings before tax authorities to be judicial proceedings. That relates to power of the tax authorities. That is again, only if it will be relevant practically from income tax department officer's point of view. Now, this next section comes as assessment for foreign income and asset. Now, this is extremely important because the assessments are made under section 10. Now, under section 10, what happens is on receipt of information. Now, actually, the word used here is information, but information is not enough, because if they are trying to make it a criminal act, there should be some kind of an analysis or application of mind on the part of the assessing officer before issuing a notice under section 10. Because we know how things work. Once an assessment notice is issued, it's practically impossible that they accept your income as such and they let you go. So information should not be enough. There should be certain riders or filters to it before this section could be invoked. So, but as of now, as stands today, it says that on receipt of information from income tax authority or other authority, or otherwise comes to the notice of the assessing officer, he shall serve a notice to the assessee. For what? For production of records or evidences or other documents. And after that, he will conduct an inquiry. Inquiry means he will consider all the evidences, and after considering such evidences and documents, he will pass an order in writing, and he will assess undisclosed asset and income and sum of tax under Black Money Act, which is payable by him. Now, there's another point is that the provision of best judgment assessment is also incorporated in section 10 only, which says that if assessee fails to comply with the notice, then after providing the opportunity of hearing to the assessee, then they can pass a best judgment assessment under section 10. Now, it is extremely important. Now, you may find it very strange that if income is assessed under section 10 and penalties and prosecution can be launched, a person cannot be arrested. But if he does not comply with this notice, then person can be arrested. Now, how it happens, it is possible. We'll come later when we discuss the issue of the penalties. But it's very stringent that the non-appearance of the person, it could take shape of. Now, another strange thing that comes into play is while assessment or reassessment, there is no time limit prescribed for any books of accounts. So under Income Tax Act, though 44AA does not prescribe time limit, but under 44 earlier, your 147, there was 4 years or 6 years. Now there is 10 years. And in 2012, there 147 was extended, where 16 period was applied to investment of income from undisclosed asset out of India in respect of which income has escaped assessment. But here they can go back to 40 years and there is no time limit is prescribed. In fact, for the Companies Act also, if you see under 128 of Companies Act, only 8 years time limit is prescribed. So now there should be, this can cause a certain kind of a problem to the assessee. And if you also see 44AA is applicable only if a person falls under the business head. So if a person is getting rental income from house property, he's not required to maintain anything. And 44AA also has a very limited in scope. It's not that each and everything that he needs to maintain. So I think that also if department can synchronize as to a maintenance of books of accounts somehow, or maybe they've left it open because it does not suit the government. But actually, why time limit has not been prescribed? Basically, there are two main reasons for this. So if you see any crime which is committed, there is no time limit for it. Like suppose there's a robbery or a murder, they can go back in time as much as they wish to. That's the principle of the criminal law. Now, in second reason seems to be in 2016 when the government came to power, it seemed to them that they will be able to retrieve the money. And the main idea of implementing this act was to repatriation of the money. They actually somehow believed that they will be able to bring the money back to the country. And that's why they didn't prescribe any time limit. But now, which has become such a stringent, and I think now there should be some time limit or some breather should be given so that too much discretion from the assessing officers is taken away, because otherwise we know as to how, what shape things can take. Now, if you come to the next slide, times limit for completion of assessment or reassessment, that is contained in section 11. So basically, very broadly, 2 years from the end of the financial year in a year in which the proceedings are started. That's a thumb rule, which is under section 10 or under 18. So that is what broadly the rule is. Now, if we come to the provisions of the appeal, you can file an appeal to the Commissioner Appeals within a period of 60 days, within 30 days, to the appellate tribunal within 60 days. And suppose you receive, if you receive a notice from the department that department has filed an appeal to tribunal against the CIT appeal order, then you have 30 days after that to file a cross objection if you wish to do so. And there's a 120 days time limit given for filing an appeal before the High Court, and High Court can admit it. Of course, if there's a substantial question of law, then they can, admit this appeal and they can give a ruling in respect of that. So, and after that, yeah, so that's what the issue is. And there are 5 cases in which appeal before the CIT appeal can be filed, which is where the assessee objects to the tax amount on undisclosed foreign income or asset, deny any liability to be assessed under this act, object to any penalty imposed by the act, object to the order of rectification having the effect of enhancing the assessment or reducing the refund, or object to the order refusing to allow the claim made by the assessee for rectification under section 12. So after this, now Gaurav, there is section 14, which is an extremely important act, which is a lot of practical in use and actually needs to be looked into carefully because it can cause problem for a lot of assessees. So section 14 is supposed to cater to a situation where asset is located outside India, is owned by one person, but is held in the name of some other person. Now that third person in whose name asset is held, he could be anyone. So in other words, where registered owner is different and a beneficial owner is different, then section 14 could be brought into play to tax beneficial owner rather than registered owner. And another example of it could be where in the case of a trust, we know that the beneficial owner is someone else, but the property is owned by the trust. Then rather than making an assessment on the trust under section 14, they can make the assessment on beneficial owner. But the problem that arises in this case is because of 2 sections, which is 1 subsection 2 of section 48 and section 53 in respect of penalty in respect of abatement. I'll tell you, see, 48.2 says that to impose penalty, you don't have to there need not be any order under the act. So that is the problems. And 53 says that in case of abatement, suppose a penalty is imposed upon a particular person and a lawyer or a chartered accountant or a banker is considered to have abetted the crime, then the penalty can be imposed. Prosecution can also be lodged upon such a person for abatement under section 53. So under section 14, though the beneficiary might be taxed and other proceeding may follow, but the registered owner might also be captured due to 48 and he might be punished for abatement, and the term may extend up to 7 years. So that we need to be careful about. And it seems to me that in certain cases where section 14 assessments are made, section 53 notices for abatement are issued upon different people. So that needs to definitely need certain consideration by. So, and another thing, sorry, you wanted to ask something?
No, continue. I think it's very important that if the asset do not belong to you, it should not be on your name. Otherwise, either we will have a Benami Act, which is there for the India sourcing, or will fall under the Black Money Act, and the repercussions could be huge, penalty could be huge. And more importantly, I feel it's not only about the penalty, it's also about the time and the harassment through which one goes through.
Yes.
So one needs to be quite cautious when supporting their friends or relatives in such matters.
Especially if the income is undisclosed or asset is undisclosed.
I feel, that one may not be aware.
Right. Correct. Right. That's correct. So we don't, because when we are in that relationship, we don't look into these issues. Yeah.
One can say, yaar, mere naam pe bahut property ho gayi hai, and I will, the authorities in my country, the non-resident relative might say that authority here will trouble me. So can I buy the property on your name? I will give you some token amount also.
Yeah. And I'm sure nobody will refuse it. कोई आज के दिन मेरे नाम पे property कराना चाहे तो मैं तो बोलूँगा ना कर दे यार, no problem. So we don't know what we get into because of that. Okay. So another actually important thing under this act is that under Income Tax Act, the penalty notices are kept in abeyance till the time your addition is confirmed. But here it is not like that. Your penalty after your under section 10 assessment is confirmed, your penalty is also imposed upon you. And that's not all. The prosecution also is many a times are launched only after the confirmation of the penalty. After the penalty order has been passed, they don't even wait for the confirmation by the higher authority. So that will also, it's pretty stringent.
There's one thing, we are running towards 6 and it's already 5:30. So
Yeah.
Maybe next half an hour we should wind up.
Yeah, absolutely. That's the reason I will skip a lot of things. So okay, so let's come to penalties. So okay, now this section 42 and 43 are very important. 42 and 43, failure to disclose or failure to furnish in schedule or failure to furnish in the return of income. So either you don't file return, or secondly you file return but you don't fill form FA. Then 10 lakh rupees penalty is liable, whether you are liable to pay tax under that or not. So I think but I think there actually, I just want to point out one decision of Leena Gandhi Tiwari, which might be of a very quite good to know. So in this case, what happened was that a foreign account was created by one person. On his death, the account was transferred to the mother. On mother's death, the assessee and her husband become the legal representative. Though the amount in this case was given to the charity, but the department said that you did not disclose it. The matter went to tribunal. Tribunal said, how can you impose penalty in such a case, and especially considering that assessee had and his assessee, her husband and the company paid tax of about 2,000 crores in last 7 years, and the amount in this account was very minimal considering 2,000 crore of tax paid. So which is great in a way, because at least tribunal is not looking at it literally. If you look at it, section 43, then there is no scope, but considering the the wisdom that our courts have, there seems to be some hope. So that is in respect of penalty and offenses and prosecution. So this is, now there is section 53. Of course, as I mentioned, this is a punishment for abetment. Every person who was in charge, if you try to help anybody in escaping the income from tax or from undisclosed sources or asset, then you can fall under the ambit of section 53. And section 56 is also very important. Now there's the section 53, 56. Yeah. So one important point that needs to consider here, Gaurav, is that if you notice that there are a lot of trusts which are made for holding the assets abroad. Now section 56, though it relates to the companies, but they have said unincorporated bodies, trust can also fall under section 56. So they must be careful about this. So I think then, because there is less time, so I will conclude and I will just leave upon you then, Gaurav, if you have certain questions to ask.
Let's go to the audience. Thanks, Teji,
Okay.
for a wonderful presentation. I think because of some internet issues, वो कहते हैं ना, जब इंसान कोई अच्छा काम करने चलता है तो उसको जो मुसीबतें होती हैं उसके सामने आ जाती हैं, बट आपने उन मुसीबतों को अच्छे से पार किया. So, we'll go to Sharad. Sharad, please unmute your Teji. Now you can close your presentation. I think वो ठीक रहेगा.
Yeah.
You can unmute yourself and ask the question. Sharad.
Yeah, thanks, Gaurav. Thanks, Tejveer, for your presentation. So I continue my query of the ESOP, the foreign shares. So this is with respect to the penalty under section 43, 10 lakh penalties. So we concluded that this might not be treated as undisclosed foreign asset, but I'm still holding shares of a foreign company and I'm not disclosing it in the FA schedule of my income tax return. So am I exposable to the 10 lakh penalty under section 43?
Yes, you are. And that's not even 43. I think there is a section 50 or 51. There's a penalty depending upon the amount. See, there is an amount of, if how much is the value of your ESOPs?
It must be running into crores.
Yeah. Then of course, then definitely. There is one relief. I'm not saying it's a big, which under section 42 and 43, they say if the amount is less than 5 lakh rupees, then bank account, in your bank account, there's only amount of 5 lakh rupees, then, you know, you're exempted from those 42 and 43 penalties. But the point that arises, you can extend to other assets also. I think court should be liberal in that respect, but crore of rupees, no.
And this penalty is yearly penalty for every year.
Yeah.
Sharad, just one thing. If you go to section 42, you know, which Tejveer was referring earlier, see the penalty under section 42 is for non-disclosure of foreign assets in the return. It is not on undisclosed foreign assets. So which means if you have foreign assets, whether they are disclosed or undisclosed, that is immaterial. The point is you must disclose those foreign assets in your return. And if you're not disclosing those foreign assets in your return, the section 42 gets triggered and it would put a penalty on you. Tejveer bhai, am I correct?
Correct. Absolutely correct.
So Sharad, are we clear on your query?
Yeah, thanks for the clarification.
That was what I was meaning, that the violation is there because assets have not been disclosed. The source is immaterial at this stage. Am I right, Tejveer?
Right. Absolutely, sir. Absolutely.
Any other query? Let's go to the chat box. So we have a question from Sanyam Jain. Sanyam is asking if any foreign undisclosed income is taxed at the rate of 120% in BM. Then it is still taxable under Income Tax Act again or not?
No. Then you will not be taxed in respect of under the Income Tax Act. And the Black Money Act clearly says that in case of dispute between Black Money, oversimplistically putting, dispute between Black Money Act and Income Tax Act, Black Money Act will prevail. Once you have paid tax in this, then you will not be chargeable to tax under Income Tax Act.
Okay. So Sanyam bhai, isko mare hue ko baar kyun maroge? Once you have already taxed under the BMA, why to tax under the Income Tax Act? And for God's sake, do not use this kind of idea on the open platform. So let's move on to another question from CAK Hanmandlo. Sorry, sir, if I'm not able to pronounce your name properly. Question is, what are the responsibilities of NRI who has asset in India under Black Money Act? So his question is asset in India and he is NRI.
Asset in India, sir, Black Money under that will fall within the realm of Income Tax Act because Black Money Act is applicable in respect of asset outside India and where source of income is located outside India.
So now let me go back to the very first question of Rahul Ahuja. I think Rahul already discussed, but just quick view, what is the period of limitation if we take both PMLA and Black Money Act all together? I know you may not be ready for the PMLA, but what would be the period of limitation under the Black Money Act?
There's no limitation. They can go as long as they wish to. As of now, that's what the law is.
Thank you, Tejveer. I think I'm done with the question. Let me see if we have any question on the YouTube. If you have any question, if our audience has any question, please raise your hand. And so we have question from Mr. E.P. Singh. What would be the income after tax in foreign country or before that? And would DTA benefit? Yeah, we missed this. Whether DTA benefit would be available or not. So we finally got this question. Question again.
Yeah. So that's a very tricky question.
Mr. Singh, can you unmute yourself and ask your question? There is some words missing in probably the question.
Yeah. Hello. Can you hear me now?
Yeah. You are audible. Please.
Yeah. So income outside India not disclosed. So what would be the income after tax paid in that country or before tax paid in that country? And if taxes are paid, would that benefit be available in India or not? Because those taxes are substantially more than the liability in India.
Brilliant question, sir. Brilliant question. First of all,
Teju, let me give some figures to this question so that everyone can understand.
Yes.
So let's say I have got a income outside India, foreign source income, and put it in income. I will request everyone to put.
क्यों?
So let's say my income is $100 for the sake of simplicity. And taxes I have paid in the foreign country or $100 is, let's say, 20%, $20 I have paid as a tax in the foreign country. Now I have not disclosed this $100 in my return. So the question of Mr. Singh is, the first question, whether under the BMA, $100 would be put to tax or $80 would be put to tax, correct? The second question, if $100 is put to tax, whether one will get a credit of $20 which they paid in the foreign country. Am I correct? So let's over to you, Tejvi.
Brilliant. I think you put it brilliantly and made the proposition very simple. So I think first you answered yourself that if it is $100, then no credit, no benefit will be given. $100 will be chargeable to tax. Now the other issue that arises then is whether you'll be liable to, or whether you'll be getting credit of tax or not. Now it has not been clearly laid down, and especially in respect of credit, there's a CBDT circular question which says that no credit will be allowable. Having said that, this proposition is yet to be tested by the courts, and practically also what assessing officers are doing is that they are not giving you the benefit of DTAA. But this proposition will eventually be tested by the courts. It seems that eventually we will be able to get the benefit of DTAA. There seems to be many reasons. Why? First reason is in one of the, okay, first of all, let's look at it. Why the department is saying you will not be entitled to tax credit? Because section 84, which give credence to few of the sections of Income Tax Act, they don't give credence to subsection 2 of section 90 or section 91 and 2. Section 191 and 2 talks about relief and of giving benefit of income of avoid double taxation avoidance. Subsection 2 of section 90 says Income Tax Act or DTAA, whichever is more beneficial, will be applicable. So these three provisions have not been given credence to under the Black Money Act. Having said that, there's another question of CBDT circular. They accepted and given credence to DTAA, not these three provisions, but otherwise they have given. So once they have given credence to DTAA, this can only be done only these three provisions. To answer this question first. Secondly, there was a decision of Bhansali, I've forgotten the first 2 days, of IIT Mumbai. There the issue was whether the assessee is beneficial owner or not. So the argument of the assessee was that under Income Tax Act, he is beneficiary as per Income Tax Act. So, and the credence is given to Income Tax Act under Black Money Act. The court said that unless the context otherwise requires, okay, the department said that no, there is no need to invoke this provision of beneficiary under Income Tax Act because that is in a different context. Now, there's a general principle of law unless the context otherwise requires, which has been accepted by the ITAT in this decision, and they say that we will not apply the decision, this provision of Income Tax Act for beneficial owner definition because the context is different in which Income Tax Act is given. There we are talking about clean transaction. This transaction is clearly unclean. So it cannot be applied. So unless the context otherwise requires has been given to credence to, though it has not been specifically been mentioned in the Black Money Act. Now, take a simple example. A person files his income tax return abroad and pays the tax. Next day, he goes into coma, or like Gaurav, we were discussing this proposition. He came up with an idea that what if somebody is here and there's a COVID for 2 years, anybody is not able to go abroad, go back, what to do? In such a situation, will you deny him the credit? No. Or will you not give him the DTAA benefit and put him under Black Money Act? No, not possible. So definitely, so situation needs to come. So all I'm saying is, you may have to go through the rigmarole, sir, that initially the department may put you through. But if you have a good case on facts, then eventually you will be entitled to your DTAA credit.
See, I feel, Tejvi is an advocate and he can certainly argue. But I personally feel, I think it's a litigated position because the credit must be given under the act. So Income Tax Act has got a specific provision for allowing you the credit of tax which you have paid in the foreign country. But as far as the Black Money Act is concerned, it supersedes. I'm going by what Teju said. It supersedes the Income Tax Act. So if it supersedes Income Tax Act and the Black Money Act, refers to few provisions of the Income Tax Act, then I'm afraid that at least at the lower level, there would be a tough time to get the benefit. Maybe until unless it becomes a question of law and goes to the High Court and Supreme Court.
Yeah, at higher level, if credit is available under Income Tax Act, it would be available under Black Money Act also, because DTA will prevail over Indian laws. So Indian laws, because it's related to income, and for income, DTA would prevail.
So in fact, to extend that proposition also, Singh sir, so there are certain, okay, Gaurav, very interestingly, there was certain amendment were made in Indian Income Tax Act. The assessee went to the High Court and said that doesn't matter if you amend your Income Tax Act, I'm not chargeable to tax as per DTAA, and whichever is more beneficial is applicable. The court said, in fact, there is a decision of Supreme Court in the case of engineering analysis. The Supreme Court has very clearly said that unless you amend the treaty also, the treaty will prevail over Indian Income Tax Act. In fact, so much so, one of the arguments which is taken by the department was that, this is a position which is litigative and we have put our reservations in the international community under DTAA OECD. But court still said, no, unless you amend it, we will not. So I'm saying, but having said that, like you rightly, so basically, Gaurav, you and me both are saying the same thing. And I appreciate that is why, we make such a good team, because you put it conservatively, I'm putting it as a lawyer. So, but we are saying the same thing.
So this is what I'm saying, sir, at least at the lower level, I do not see any light. But yes, at the High Court, at the higher levels, certainly it could be a good ground to argue that, the Black Money Act is again taxing the income, correct? It is again taxing the income. So instead of taxing the income under the Income Tax Act, it is taxing under the Black Money Act. But at the end of the day, what you are taxing is my income. So if you are taxing my income, then the DTA talks about the the credit of taxes paid in the foreign land, and it is written in the DTA. We have a specific paragraph which talks about the credit system. So ideally, credit should be available, but yes, to the best of my wisdom, it will become a question of law, and it needs to be answered by the High Court or the Supreme Court.
So this is exactly the position as of now. That is right.
ऐसी तो मर गया ना बेचारा, सुप्रीम कोर्ट तक लड़ते लड़ते।
सर मरा के उसने कमाए भी तो है।
सर ट्रिब्यूनल लेवल पे भी मिल सकता है, ऐसा नहीं है, ट्रिब्यूनल लेवल पे भी ऑर्डर आ सकता है।
आप सोचिए सर, अतुल सर, उसने अपनी फॉरेन इनकम इंडिया में डिस्क्लोज नहीं करी जो उसको करनी चाहिए थी। अब वो मरा तो इस वजह से क्योंकि उसके मन में लालच आ गया था, अदरवाइज ही वुड हैव डिस्क्लोज्ड द इनकम इन इंडियन इनकम टैक्स एक्ट। व्हाई ही इज नॉट डिस्क्लोज्ड नाउ? बिकॉज़ ही हैज नॉट डिस्क्लोज्ड, ऑल दिस लिटिगेशन इज फॉलोइंग।
गौरव, आप प्लीज इनकम टैक्स डिपार्टमेंट मत ज्वाइन करना, मुश्किल हो जाएगा हमारे लिए।
नहीं, अभी तक तो हमारे साथ है, आगे का पता नहीं। Gaurav, great deliberation. Tejveer, really remarkable. Great deliberation.
So I think it's time to wind up. Thank you to all my participants for joining in today's discussion. I would suggest all of you and request all of you to kindly like my YouTube channel, because we are putting a lot of stuff on that, and on the next Tuesday, on the coming Tuesday, that is 23rd of August, we would be having discussion on clause 30C and clause 44 of Form 3CD tax audit. I think these are two most debatable clauses which are going on. One is the disclosure about the GAR, General Entity Avoidance Rules, and another is disclosure related to GST. So for GST, we will have none other than CA and advocate Gaurav Gupta ji, who is my good friend and a good speaker on the GST. And I would myself be talking on the GAR provisions. So I would request you to kindly register yourself and join the same. And also, the recording of this session is available on my YouTube channel, which you can go and watch anytime as per your convenience. Now, thanks a ton to Tejveer for joining us today and giving the deliberation and making us go through various provisions and more importantly, correlating those provisions. कि ये होगा तो वो होगा, वो होगा तो क्या होगा. And I assure you that we would be hearing Tejveer again on the PMLA soon. We would be planning a session with Tejveer on the PMLA Act. So maybe in the month of September, we will do it again and we'll request Tejveer to come back and enlighten all of us. So thanks to all of you. Thanks to the audience who have joined us on a YouTube.
Gauravji,
Yes, sir.
I will request Tejveer to say the interplay of other acts along with the Black Money Act. Because it is becoming very, very important now.
Yeah. So in other session, we can plan that because abhi to time kafi ho gaya.
Absolutely.
So thank you, Tejveer. Thanks a ton for joining in today. Thanks to all.
Thank you. Atul sir, मैं ध्यान रखूंगा. I've got noted your question for next query as next session. Definitely we'll do that. And Gaurav, so nice of you to invite me, and it's been extremely nice to to deliberate with you during the session. Before that also, it's been quite nice. Thank you so much.
Thank you.
Thank you so very much.